20th of March 2023, Monday guys, MAO with Cal once again. Guys, this is crazy. This is a must-watch video. Make sure you get your friends and forward this video to your friends right now, because I got something incredible big to share with all of you, and this could be a long video, so stay tuned all the way to the end, because I strongly believe that the UBS Credit Suisse deal may have a problem later on. Okay, I know that now people are celebrating that the UBS is buying Credit Suisse at a very, very low price. But I feel that the shareholders will not be happy with it, and things can go very ugly. And in fact itself, right, the next targeted stock in my context now is actually BlackRock. Yes, sorry, Blackstone, yeah? Blackstone, my bad, Blackstone. Because to me, this company has to be a problem. Tell you more in details very shortly. Let's go. Now, first of all, 29th of March, we will have the Makan session, the spin the wheel, lunch with Cal. Remember that. So please, guys, if you want to join me for the lunch date, this Saturday, we're going to do the spin the wheel. So from today until Friday, post something into the comment box. Basically all related stuff. Yeah, don't just say hello, hi, Cal. Don't work on that. Something about what you watched on the video, and then you put some comment. Once you pick it up from there, your name is selected, and you get the chance to have the great lunch with me next Wednesday on the 29th of March. Okay, and this place itself is actually at Paragon Shopping Center. All right, we're going at 12:30 p.m. and this particular restaurant has a 4.5 star rating. Oh my god, amazing. Yeah, out of 780 reviews is not easy at all. Okay, so guys, if you want this lunch with me, guys, something very different, let's go. Okay, all my friends from my Muslim friends, if you can join, because this is the only one, this is the first time we're doing it with a halal restaurant. Yep, okay, let's go. Now, disclaimer apply as usual, and thank you AIMS for the kind sponsorship. Now, last Saturday, we have a great preview session, okay? Very good one. I think we hit a peak of nearly 90 plus people coming in. That's good. That means that about 30 plus people, they registered, but they couldn't make it in time probably. Don't worry, the replay will be out tomorrow, okay? But of course, you will miss the special promotional price, okay? Now, we have a lot of people coming in. Thank you guys for all the strong support. And of course, those who left your congrats and thank you, I really appreciate that. Thank you guys once again. Now, the thing is this, last week, we talked about what the prediction on the crude oil. So I did cover that a little bit. So if you want to know what level am I looking at for crude oil tomorrow during the replay, watch it. And of course, I talked about 3 counters, and one of them is Sembcorp Industry. I don't mind sharing with you. So the stock itself, right, we're looking at to buy at around 320. If you ever come down, that'll be a good 350. Sorry, that'll be a good price, and hopefully it stay there. If we come down to 320, we'll buy more. And I'll tell you more in detail why we're buying more if you watch the replay tomorrow. Yep. Okay, so let's recap what happened last Friday. Okay, now last Friday the Dow Jones plunged 384 points, Nasdaq down 61 points, and S&P 500 down by 43 points. So once again, the S&P is going to test the 3900 level once. Okay. Very interesting. Microsoft was up, Google was up, Nvidia was up, right? So all the big companies were up, right? Apple was down slightly, Amazon was down 1%, so maybe compensated here and there. Then what happened to Nasdaq? Well, apparently, right, there are some selling, and one of them was Tesla. And of course, we have ExxonMobil, we have Chevron, all coming down. Why? Because they are now heavily linked to a potential recession. And of course, the bank share got hit the worst. JP Morgan down 3.7%, Bank of America down by 3.9%, Wells Fargo, Morgan Stanley, all down between 2 to 4%. So all this tells you that the financial sector is in great trouble, and once the financial sector is in trouble, it will spread backward, it will spread to the rest. And that's the reason why I'm pretty worried for you guys if you are not hedged or you have been buying now. Okay, some people may be asking me, Kel, the market is down quite a fair bit. From $1 share example, it's dropped to 20 cents, isn't it a good time to buy? Well, in technical, it's very cheap. It's like you're paying, like you just bought something for 80% discount. But the question on us is why this thing is selling at 80% discount? You have to ask yourself this before you jump into it. Value investment is not wrong. But the thing is that if the share price can go down to 17 cents, why don't you wait at 17 cents then? All right. But of course, you can try to buy some here to nibble on it and just hope that this company don't go belly up. All right. That is something that I'm very concerned right now. So the thing is, First Republic Bank and the regional bank resumed sliding, and I've been warning you guys on Friday, during MAO, I said be very careful. Thursday rally is a big question mark. Remember that? Good, you remember that. So let's take a look what happened. First of all, First Republic Bank all came down because they are very worried. And in fact, First Republic writes like 72% for the entire week. That's really incredible. Now, I was sharing this with some people last night, with my students. I just feel that something is just not correct in the whole equation. It's that last month, the share price for First Republic was trading at $100. Then within a month, okay, it lost 70%. The question is, how come? I mean, doesn't the market knows about it? Didn't they went through the stress test? Didn't they do all the necessary bottom checking and compliance checking? I can tell you guys, sometime in life is right. If you look into detail, you will know that something is not correct at all. I'll tell you more in detail later on. So the thing is this right now, the SPDR Regional Banking ETF, KRE, has lost 6% in the session and down 14% lower in a week. This is not a good sign, guys. So Credit Suisse, although we know that there's some movement right now, it was down on Friday, and this morning, likely later today, there'll be more selling because of this UBS coming in. And of course, the question is now that, is the market in the bear territory? Nope. Actually, look at it, right? The whole week, S&P is still up by 1.43%. Incredible. And Nasdaq is up by 4.41% for the technology. The thing is this, we know that this coming Wednesday, which is 2 days from now, the FOMC meeting, most likely there'll be a 25 basis point hike. Although the market is looking at 0, but I'm looking at 25, and I believe that it will stay at 25 because ECB already hiked by 50 basis point. I don't think Federal Reserve will take that position on that. They will print money, they'll get money ready for any more financial issue, but they'll still continue to rate hike because there's no a mandate say that they cannot put out money and then have rate hike at the same time. It is possible. That's that. It's not very common, but it is very possible. So I strongly believe that there will be more banks coming up. All right, there'll be more banks coming out to have problem very, very soon. All right, okay. This is why I need you guys to be very careful on this right now. Yeah, okay. Right. Look, now let me explain to you. Why S&P 500. Okay. Now let me explain to you the S&P 500 first. Okay. First of all, you must understand this. Now, last Thursday, S&P 500 shot up, right? Okay. So I warned you on Friday, be careful. What's the reason? Okay. Let me explain to you. On Friday was the first quadruple witching. Remember that? I reminded you guys. That's why you see the volume is so heavy. So what happened? Imagine if I'm going to have options, okay, written. And the last few months, the market have been coming down, right? You can see the market have been, last few months, right, the market be coming down. So naturally itself, right, you want to kill off all the options. What I will do is that I will pump the market, right? So you can see that, right, first of all, they tell you that the balance sheet is up by $297 billion. It looks like pretty good, right? But the thing is this money itself is not going to enter the economy. It's the money just prepared to basically prepare for any financial needs, which obviously the banks have already taken quite a fair bit from them already. Yes, more than $150 billion was taken from the Fed last week itself. Okay, and the thing is this, as you know, all right, just because of Thursday recovery, wow, you see cash literally poured into the largest ETF, okay, on the bank rescue. So that's why on Thursday, the bank shares, the recovery was there. But incredible, on Friday, the market sold off. Why? Because it is the quadruple witching. That's the thing here, guys. So on Friday, we saw the quadruple witching, and it was a huge option exploration. And as you can see on this is the little caption here. Usually, if there is going to be higher volume and stuff, right, the quadruple witching day is usually a bearish day, and it's actually reflected right here. So guys, that means that the market pumped to dump, and most likely today we'll see the market coming down again. I believe that the market is going to come down again. It will break below 38.80, and that is something that you don't want to see because traders, this is not going to end good. Okay, I'll tell you why. So first of all, we have no data tonight, but on Tuesday we have home sales, and Wednesday we have the oil inventory. Okay, put that aside, that was not the most important thing. But on Tuesday, something big going to happen. I'll tell you more. On Thursday with the FOMC meeting, and you can see the market already pricing in a 25 basis point. So while the market is saying that no on rate cut, but the market is already telling you I'm going to have 25 basis point. And there's a very high chance that they'll go for another 25 basis point. Now, if Jerome Powell want to stun the whole world because ECB raises 50 basis point, that will be crazy. Because if Jerome Powell say 50 basis point first, I can guarantee you the stock market will dive 2% immediately. Maybe he will say after February phase 1, we'll relook at the market, then the market may recover, but that is something out of the world. I don't think so. And of course, the initial jobless claim, they're looking to have a higher number. I think this time round, we'll see 200,000. Yeah, I think so. Yeah. Okay. Why? Because layoff has started. Now, what is concerning on Tuesday? Apparently, Donald Trump, yes, the ex-president Donald Trump, the former president, said that he's expected to be arrested on Tuesday in Manhattan. And he's actually urging his follower to protest. Oh my God, what's happening right now? So the former president called illegal leaks from a corrupt and highly political Manhattan District Attorney office. Okay, so apparently now, right, there is ongoing rumors saying that Donald Trump will be arrested, indicted on Tuesday, which is tomorrow. Now think about this, if he really get indicted, all right, I can tell you the street will be full of protesters and stuff like that. And plus Wednesday, we have the FOMC meeting. This will not end well at all, okay? So let me bring you the video of Donald Trump about this coming potential problem. The thing is this, guys, and it's quite incredible. He has already won on this case, and now they're going to bring it up again. No, you find it's very silly. This is really nonsense. And how about this Hunter Biden then? Okay, guys, so watch out for Tuesday. This is going to have more fireworks coming up, all right? This is going to be crazy. So some experts are very concerned right now with the First Republic so-called issue. And they feel that, right, that will be more problem coming in. They may face a second S&P downgrade in less than a week. So let's watch on Bloomberg TV regarding about this news here itself. Let's go.
We've got no idea what's going on right now. On Friday at the close, the market took care of business with Credit Suisse and priced it at 186. What did this deal close for? 76?
Yeah, something like that.
Okay, so what, 3 billion Swiss? They raised 4 a couple of months ago. They raised 4 billion, and now it's worth 3. And I was told repeatedly that the Swiss unit was worth, what, 10 billion?
Correct.
And they're getting that for 3, and they need to throw government guarantees in there as well. Now, that's just Credit Suisse.
And take out the AT1s, don't forget that.
Does that not make you just pause and say, there might be some stuff that I don't know here?
I think the fear everyone is going to have is if we get a look behind the balance sheets and really what's in there, are the losses more concerning? And in all these things, right, we all know what it costs to sell a treasury or sell a mortgage bond, right? There's a bid out there. But if 10 banks are all selling that same bond, the bid will be lower. If 30 banks are all getting 4. So that is why I think we've got to stop this deposit flight, because it creates effectively forced sellers and price doesn't become the object then. So yes, I think that is the risk. And that's why I'm not in love with what happened in Switzerland today. I don't think it solves the problem for Europe. I think their problems are different than ours. Here, I think a deposit guarantee would really solve this issue for us, or at least put it on hold. But that's going to be the scrutiny that the bank balance sheets are getting is going to be intense, and it's intensifying. And more people want to know, what do you have, not just in terms of the details of your maturity, the types of assets, but even where are your deposits? Where's your cash sitting? Yeah. That's a new thing.
Exactly. Amusing, right? Imagine that you are in a country right now and you want to save some money, but you don't know that your money will be safe. My God, then who the hell will put the money in the bank? And if I'm an international investor, I'm going to invest in this country, and I realize that the bank itself are not able to protect my money, who the hell will come in and put money? So all this thing is really terrible. And the thing is, they just raised some cash last month, and the money just gone. Imagine that. This is crazy, guy. So the thing is, right now, we all know that there's a stress test that the US did it. Remember? They did a stress test and they tell you that everything was fine. The question is, why? And what happened? Where were the stress tests involvement? So we know that SVB was rated one of the top banks, okay, and even Forbes cover it. So if that was the case itself, the question on us is that what happened to the stress test they did last year? Apparently, when they look at the numbers, you really can't find SVB inside there. That's the worst part. They actually went through a lot of companies, including Goldman Sachs. Okay, pretty cool, right? Barclays also involved, and we have Pyramid Barabas, USA, blah, blah, blah. But if you notice, SVB wasn't inside there. Oh my goodness. Purposely or miss it out? I don't know, guys. This is something really crazy. So to me, it's already this whole thing more than meets the eye. I was sharing with my student yesterday. I don't think this financial problem is just because of SVB. I felt that something was there from the very beginning. So the thing is that right now some economists are writing that there could be dozens of banks that could face a similar pattern with SVB, and it could be as much as 186 banks. Now, I already told you guys last week, it won't be like that. It will be more, definitely, because imagine the 16 bank is down. So the first 15 bank, how would it be performing? And the remaining bank at the bottom, there are more than 1,000 over banks in America itself. I think total is 4,000 if I'm wrong. My goodness, guys, how can that be? There will be more banks coming out very, very, very soon, okay? And this is why am I pretty worried right now. Now, of course, we all know that now UBS is in talks to acquire Credit Suisse last Friday, okay? Then there were people who were pretty concerned. In fact, some of the people who works in this UBS came out and said they cannot imagine buying this Credit Suisse, okay? But of course, again, now the news is out already that UBS is buying Credit Suisse. The thing is that right now, right, apparently Social General, Deutsche Bank, HSBC, all of them say that, you know what, we're not going to deal much with this Credit Suisse anymore. In fact, there's a number 4th bank coming out. We haven't got a name yet, but all these are the very concerning factor here. So let's go back to Credit Suisse again. This company started business in 1856. It's even earlier than the Dow Jones creation, okay? So for 170 over years company or bank to go down is really insane. So, but the thing is that when we saw this, when the Credit Suisse Credit Suisse credit default swap, CDS, all right, hit 1,000, we all know that that's it, they are screwed. Because that means that very high chance the company will file bankruptcy. And of course, immediately, no choice, no more buyers coming in. They approach now this UBS, and apparently UBS has agreed on that itself. So now you can see UBS has agreed on an emergency rescue of Credit Suisse. All right, they're going to go a $3.3 billion deal. Now, initially, UBS only gave a $1 billion offer. Then, of course, they ding dong to $2 billion. $2 billion, ding dong. Final offer, $3.3 billion. But that means that if you translate into the share price, gosh, that means that it's a knockoff of almost 60 to 70% of the last done price on Friday. Gosh, this is bad. So undeniable later, Europe market will have some big problem, yeah? As you can see right here now, to clear my screen a little bit. So now, Credit Suisse shareholder were deprived of a vote of the deal, will receive 1 share in UBS for every 22.48 share of their own. Oh my goodness. And that will value the bank at $3.15 billion. Do note, Friday, the bank was worth $8 billion. That means there's a knockoff of more than 50%, about 65%. So this is crazy, right? Yes, indeed. But then this is not the end yet. I'll tell you more, right? So the thing is, you must understand now, because of that, UBS sacrificed a lot. They lost another 40 basis points to 215 basis points for the fire contract on their credit default swap. They will own the credit default swap. Do note, okay, that means that, right, they're taking a hit right now and people are getting very worried, okay? Now, take a look around. This is UBS. Now, for the last how many years? Let's take a look here. Now, since 2013, the highest level for the credit default swap was about 140. Because they're not going to buy Credit Suisse, yeah, risen up all the way to 200 and almost 30 right now, almost there. Okay? So think about this, how much problem they have actually put on themselves. And the thing is this is not the end yet, okay? Because the biggest problem is this, okay? They actually has a material clause inside there, a material adverse change, okay? The clause was supposed to say that, right, if their own credit default swap hit by 100 basis points, they'll cut the deal. But because they know it will happen, they have to remove away immediately. And luckily, they remove it, because if not, by now, they have to cut the deal away. So that's the reason why I say that the deal can go pretty sour, yeah? Now, the thing is this. Look at the list of the 40 biggest investors of this UBS. Now, the first one is Saudi National Commercial Bank, Qatar Investment Authority, and then BlackRock. Oh, gosh. So what I'm trying to say is this, guys. Imagine. You are now buying Credit Suisse, and your 40 biggest investors didn't know about it. Okay, they're not notified, by the way. So they don't get the nod. So imagine if, let's say, Credit Suisse business model continue to fall, and it actually cause more problem for UBS. What do you think will happen next? You must understand, Credit Suisse, ever since the first one was green sale insolvency, that gave them the first big problem. Then the Archegos implosion. Remember that, Archegos? Yes. Then after that, their own chairman resigned when it was at 8 to 50. And then when the profit warning, merger speculation came in, it didn't well fell. Then this new CEO came in. They tried to do strategic recovery, capital raise. It recovered a little bit. Then after that, what happened? Okay, the thing just fall off because of SVB, and then the Swiss National Bank coming to help to save the day, but it didn't really pull out. And now UBS coming in to buy very, very cheap prices. So you ask me, seriously? Come on, man. If I'm an investor, I put money with this Credit Suisse, do you think that I will be, for UBS, do you think I feel happy about it? I don't think so. So to me now, right, the scary thing is this. What if they really force it out and kept the deal? To kick the deal away, I cannot imagine what happened to the entire market. So this is actually the biggest financial problem in Europe. The last time it was in 2021, we have this Spanish club issue whereby the loss of SPIC, right? But now in terms of this is even bigger, all right? This is really much, much bigger, all right, in the financial market. And so now we're talking about this Credit Suisse $17 billion risky bonds are now worthless, okay, after takeover by UBS, because it's a bond. So it's created for that moment, right? So that means that now it'll be gone. So whatever money that you lend to this Credit Suisse is no longer worth anything. Imagine that. So with the ECB right now hiking 50 basis points, and they may go further, what do you think will happen? Well, things can be going first, because they are now looking at inflation, because inflation was probably the only reason why the US Federal Reserve increased interest rates. So that means that if they want to solve the problem, they'll solve it by making sure inflation go down first. So I'm not half surprised to see ECB raising another 25 basis points, even though the market is speculating 50 basis points. I don't think so. I think there will be more, all right? And that's the reason why now China is pretty smart. They've been cutting away. Since they cut their treasury now to the lowest level since the global financial crisis, okay? They have been cutting and been cutting and been cutting. As you can see from here itself, right? Let me find the thing here. Since, from the start of this last year, from 1.10 trillion, they've been cutting down to now $859 billion. They have been cutting, okay? And of course, Singapore instead have been increasing. Okay, so you understand what is happening right now, yeah? Pretty cool. All right, so with this information, what does it mean, right? Well, look at it, guys. From the highest in 2014, now it's at the low end level, right? Basically, they are trying to move away from US. China really wants to move on. They may think that something is not going to go right. And we all know that if this time the crisis cannot be resolved, the only way, again, is to print money. And when you print more money, the US dollar depletes, then obviously it's not right, the bond, well, it'll be worth much lesser. So again, I think China learns their lesson in 2008. They know that how the US will play this game, so they quickly run away. And of course, right now, you can see they are no longer the number one. In fact, Japan now has overtaken China. So if anything go wrong, then Japan may have to come together with it. Yeah? So we all know that the last time when Russia cuts away their so-called US holding, right? And after that, right, they went into Ukraine. So just wondering, so China, by doing this, is it because they want to enter another country? Very interesting, yeah? Okay, guys. Now, of course, you may say, Cal, but the US Federal Reserve has opened the lending tab. So what's the problem here? Well, we have an issue, guys. A record of 150 billion was borrowed by the bank for the Federal Reserve discount window this week. All right. Do note, the last time during the Lehman crisis, the maximum was about $110 billion. And that was really when the market has entered recession, okay? Right. Then they said no choice borrow. Borrowing money from the Federal Reserve discount window is like borrowing from your mother-in-law, whereby you get not only the money, but you get really all the poor rating. So the same thing over here itself back in 2020, even during the pandemic itself was so bad, they only borrowed about $55 billion, okay? But now they have borrowed more than $150 billion, and we are not even near recession yet, at least not officially. So give a guess what is going to happen very soon. I think anybody can see this. We'll see worst problem, right? So now Federal Reserve have increased the balance sheet, and this was not going to help. And of course, recession will always be there when you see things happening in this way. So traders, please be careful. This is not the end yet, all right? Now, the thing is this, why I think Blackstone, again, I keep on confusing between them. Now, why do I think Blackstone itself is an issue? I think this is a personal opinion. You can just listen for reference sake. All right, first of all, remember, okay, recently, all right, Blackstone real estate business is totally fine, said the CEO himself. He said, don't keep on asking me, we're okay, we don't need to do this, don't need to do that, we're all okay. Okay, fine. So the thing is this right now, we can see that now we have problem, guys, because Blackstone $69 billion real estate fund hits monthly redemption limit. They only allow to 2%. This is not a good sign for a company worth almost $1 trillion. Correct enough. Remember, last year itself already, the Blackstone REIT redemption saw or equity raise tumble. All right, already the thing happened in November last year. Then after that, it's all right, in December, Blackstone limit the BREIT withdrawal as investors' redemption keep on coming up. That means that the people, those smarter people, know that something is wrong. They quickly ask for redemption, and for those who are fortunate, they may have got out a bit of money. Then, of course, by the later part, it's all right, in this February, that we know that they're going to stop it because the redemption is way too big. So if there's no problem, why would you want to redeem? And if you have no problem, you should be able to let go, right? So again, all this tells you. And now the investors are being blocked, all right, okay? They're not allowed to do a withdrawal anymore. My God, this is really bad. And have we seen this before when you get all this sort of thing, when you get blocked, and you can't get back the money? You know already, right? Something is definitely wrong right now. So while people are getting blocked for the money, the CEO himself, Steve, has basically earned $1.3 billion, and now his net worth is $330 billion. This is how the world works. Even a CEO makes so much money, and yet it's how, right, the people are suffering. How much is that? Well, apparently, under Blackstone, right, directly, indirectly, there's about 31 million pensioners, okay? And FYI, this is coming from the official website, okay? Not that I just read it out, it's coming from their own official website. So imagine these people now is having trouble to get money back, and they see the CEO is making $1.3 billion. How can they be able to be happy with this? And with the current situation right now, look at Blackstone chart. This is not good. They are trading below the 150-day and 200-day moving average, and you can see that every time it hit itself, there always be pullback. So I believe that Blackstone will see $71 again. Now I'm pretty confident that now from $84, we'll see Blackstone coming down to $71 again. But the fundamental seemingly not too bad. First of all, they still got $880 billion in their assets, and they are still in total assets here itself, there is $41 billion. But the thing is this, apparently the news says that they've been buying more stuff. They've been buying Blackstone One Liberty Plaza stake. They've been going to shop. They've been buying this Cvent. All right. The only thing is that now there's some articles saying that because the last year and the previous year they've been buying so much, it's now having a problem. Which is true, because now it's going to be a mortgage default crisis. Definitely, whatever been buying and selling is losing money, right? Definitely, for sure. So in my opinion, I still think that there'll be bigger problem coming in, and I think that Blackstone, we really need to watch this carefully. If Blackstone really come down to $71 or so, right, I can pretty sure that things will really get a shake from the financial market. All right. Well, I'll see you guys on the technical side. Hope you enjoyed this session. Remember to leave a comment. Thank you very much. This is Kel signing off over here. Bye-bye.